Good evening, this is Niall at Learn to Trade the Market. Wanted to talk about the British pound tonight, and we can see there is a giant level there at 1.7620. We had a pin bar form around about 48 hours ago. You can see the high there at 176.20, and then a giant pin bar, even though it did close positive on the day. Off this bottom here at 170, moved up to 176.20. The session sold off here. You can just see that giant pin bar setup, and the strategy is going with the trend, so we're going to take that trade. And there was a retrace back up to actually test those highs. We've had now two pin bars and the market's selling off. So I guess the question I've been getting is, how do I trade it? Well, I took the first signal. There was a pin bar, so I just shorted the first retracement back up, which is the 50 to 55% range of that first candle. The entry was around there 175.20ish in that area there. And I guess the question is, well, if I missed it and I saw this setup now, would I take it? Whilst I can't answer that directly, there's nothing wrong with the setup. There is two pin bars. It's in the direction of the trend. The market's selling off. The bias is obviously short here for the professional traders because the market is falling in line with the trend and price action agrees. If we want to take it one step further, we can also see confluence of this horizontal level through here at 176, which was a prior swing high. You can see there was some tails on these candles through here. So 176 is obviously very important, and the market is trapped below it. So knowing that, you would have to think that these lows down here are the downside support target, at least near 168. And whilst that isn't a trade setup, so it lets you know where the market's going. So all you got to do is find that previous low, mark it on your chart, and that's your first reference for a profit target, or at least where the market's going to stall out. I actually traded that pin bar as it was, entered in the 75s, and I got out in the 71s overnight. So it was a 3-to-1 risk reward trade for me. If you're looking to get into the setup as it happens live, you've got to kind of be a bit savvy with your stops. So if you're entering at 173 now, where's your stop? It's got to probably be over 200 points, which is pretty wide. So you'd probably have to look for more of an intraday approach so that you can have your stop that little bit tighter. So there you have the pin bar signals. We're going to follow that one and see where the market goes, and I'll recap it in a few days and we'll see how the market fared. This is just another quick reminder to everyone that I have launched my Forex trading course. Access it by clicking trading course at the top right hand side of the learntotradethemarket.com website. In that page you'll see details and videos of the course content, synopsis, etc. Down the bottom we have two options. There's a outright one payment of $397. I'm pretty sure that is a fair price based on the fact that most people do trade and risk more than that on a trade. So if you can't afford the course, probably shouldn't be trading, in my opinion. And the second option is three payments of $133, just to make it easier. Some of those guys are still on paper accounts and learning that don't want to commit to the full amount in one go. Alright, so just to recap, it's the right hand side of the page there, trading course. You can obviously email me any questions you've got regarding the content before you buy if you're not sure. Alright, we will see you next time. Take care.